because she didn't like them. She's made me and the other shift
tried to humiliate.
I guess I should say that. And technically...
Alrighty. We are almost there. Almost. Live. Alrighty. Okay, that seems to be rolling. Good evening, everybody. Here we go. All right, Lisa G, good evening. Jake, Eric, Shazy, Steve. I speak the truth. Jonathan, Justin, Gabriel, Latonini. Okay. Laura, good evening. Martin, Lisa, good evening, Lisa. Gabriel, good evening. Secretariat, how are you? Marty, Erica, Fred, Lisa G, good evening. Fred Dog. Ed Jones, what's going on? Herman hates liberals. I'm pretty sure that's what it is. Fred Dog, Mo D. All right. Good evening, everyone. My name is James. This is Dividend Stock Talk. Welcome one. Welcome all who walk or crawl. Haha, that's good. Gabriel wants to take a look at Dow. Way to go. A-Dub, what's going on? Don Johnson. Mike Sweeney. Brenda King. Good evening. Jason. Okay, so Gabriel, first on the list. Mr. Wisdom, good evening. Sylvester, good evening. Bill. Evening there, Mr. Bill. Hyatt Cote. Fly Killeb. Okay. Thomas Carter. Good evening. Ice 17. Joseph Fugget. Austin, what's happening? All right, so good evening, everyone. My name is James. Like I said earlier, this is Dividend Stock Talk brought to you by the 10-Minute Trader. Okay, now, in 2009, my 9-year-old daughter wanted to know, was I say 2008? Yeah, I did say 2008. 2008. My 9-year-old says, Daddy, what are you doing? Can you teach me? So here I am. How old was I? I was in my 40s back then. Holy cow. And my 9-year-old wants to learn how to trade stocks. Okay, great. Wonderful. How am I supposed to, Riley, how you doing? How am I supposed to teach a 9-year-old how to trade stocks when most adults don't get it? Okay. So for my 9-year-old, I had to come up with 5 criteria. Simple, safe, predictable, consistent, and no way for her to lose. Now, I know that last one might get a lot of you saying, no way to lose? That's not possible. Well, maybe not. The way I look at it is, a lot of companies that I invest in, let's say Coca-Cola, Pepsi, they've been Coca-Cola and Pepsi for over 100 years. What makes me think just because I'm going to buy it that it's going to disappear? 140 years they've been making Coca-Cola. Pepsi, 120 maybe? But still, Ford, General Motors, Harley Davidson, been in business for over 100 years. Bank of America, Wells Fargo, Procter & Gamble, Colgate-Palmolive, Heinz Ketchup. These companies have been in business for over 100 years. More than likely, each and every single one of those is going to be there and continuing working long after I'm gone. So when I say no way to lose, well, if I'm buying Ford and I refuse to sell it for less than I paid for it, well, the only way I can lose is if the company goes bankrupt. Now, can it go bankrupt? Yeah, a lot of companies go bankrupt. But Ford, they've been around for 100 years, and there's no signs of issues at the moment. Well, anyway, besides the point. Let's keep moving forward, kind of get a good idea. When I say no way to lose, what I'm thinking, other than something tragic happening, okay, I don't think Ford's going anywhere. I don't think General Motors is going anywhere. Harley Davidson, I don't think they're going anywhere either. Innocent, how are you today? Work with Nature, 420, how you doing? Just curious stuff. Have you heard the news, the price? Okay, lovely. Let's hit that. All right, Work with Nature, gotta love it. How am I feeling on XRP? Jason, XRP is not a dividend stock. So let me see if I can back up just a little bit. Okay, I'm looking at dividend stocks specifically because they share their profits. Now, I'm 61 years old. I'm retired. I'm on the other side of the fence. Most of you on the other side of the screen, you're probably still working, trying to figure out where to put your money, or, well, why else are you here? Think about it. This is an investing show. I invest in dividend stocks, show you exactly what I'm doing. Now, it's a very niche market, very small. Jake Claver's company on XRP dividends. Okay, Jason, you got to give me the ticker symbol. Okay, I didn't know XRP was paying dividends. And if they are, how long have they actually been doing that? Can't be that long. All right. Happy birthday. All right, today is my birthday. Good for you, Taylor. AGNC. Keen. AGNC is one of those companies I just don't do anymore, only because the numbers aren't as good as they used to be. I don't know what else to say about that one. All right, so what's going to happen here is you guys are going to give me some stocks to take a look at. I'm going to throw them into the program that I came up with. This is not the program. This is Think or Swim through Charles Schwab. It's a trading platform. Xander, what's happening? Lily, hi. Bunt. Okay, good evening to you too. All right, so that being said, you guys need some stocks to take a look at that you think are good. Now, let me give you an idea where I'm coming from. I'm 61, so every dollar I earn comes from my investments. Okay? JPM. What is JPN? Keith, sit tight. ARR. Okay, Keen, AGNC, we're going to get to that in a second. I'm going to pause this for a minute. I'm going to give you my example on that one. Gabriel's the first one to come up with Dow, D-O-W. So we're going to take a look at some of these companies. I'm going to run it through the mill. Now, what I'm looking for is a simple, safe, predictable, consistent 1% per week. Now, how am I doing that? Well, I'm using dividend stocks coupled with stock options. Specifically, either a cash secured put or a covered call. I tend to lean towards the covered calls because they're safer than the cash secured puts. But we'll get into that in a minute. Let's keep on keeping on. First one on the list today is going to be Dow. Thank you from Gabriel. Gabriel, what is interesting? Okay, so anytime I look at any stock, it's always the same thing over and over and over again. A, B, C, 1, 2, 3. It's always the same. I look at a chart, I want to look at the 1 year chart. Last year, what has this stock done over the last year? Now, the first thing, I'm looking for five little tidbits of information from this chart. Now, you should be able to see it within 3 to 4 seconds. And you're probably thinking, so, oh, can I do that? Yeah, you can. Okay, you ready? Here we go. Number 1, dive. There it is. Number 2, the low. There it is. Number 3, where was it a year ago? Number 4, where is it now? And number 5, what is the overall momentum? Down, down, sideways, down, sideways. We're at 22.93, which means more than likely, if I'm going to jump into this first thing tomorrow morning, it's going to be 23. Because 22.93, the closest whole number, or the closest strike price right here, I don't want that. That's December 19th. Nope, I want November 21st. There we go. Now, let's take a look at more. There we go. These are what is called a strike price. So, purchase price, $22.93. Strike price is what I am going to sell it for. So, if I buy it at this price first thing tomorrow morning, I'm going to sell it at the very next number right here. So we had 20.50, 21, 21.50, 22, 22.50, 23, 23.50, so on and so forth. These are called strike prices. Over here, these are called expiration dates or option dates, weekly option dates. Now, you see the sign up there says weekly options. Yeah, weekly options, not monthly, weekly. Okay, 21 November. That's this coming Friday. 28 November. That's next Friday. 5 December. That's 3 Fridays away. Can you imagine that? 3 weeks we're in December? That's crazy. 4 weeks. 12 December, 19 December, 26 December. Then we get into January. Every single week there is an option that is available for me to trade on a certain amount of stocks. Not all of them, but certain amount. Okay? So when I'm investing, I'm looking for 2 things, and only 2 things. Okay? Number 1, consistency of profitability. It means I want to make sure that the company is consistently profitable. Why? That's what I put my money in there if the company's not profitable. It just doesn't make sense. Number 2, weekly options. Consistency of profitability and weekly options. That's the 2 criteria I'm looking for. Cowboy Dan. I'm not protecting Kermit anymore. Google the words Kermit was the best. Okay, no, I'm not even going to do that. Okay, so Rajesh. Okay, terribly sorry, dude. I don't cover the Indian market. I don't. So I have absolutely no idea what's going on over there in India. So I can't help you out with that one. Big K. Thanks there, Big K. Way to go. All right. So that being said, let's take a look. After we take a look at those 5 things, the high, the low, where was it, where is it? Now we want to take a look. Is it going to be profitable for us? So price 22.23. The closest strike price is going to be the 23, and that's selling for 55 cents. Now remember, I say I'm looking for 1% per week. Well, I'm going to buy the stock. I'm going to sell it first thing tomorrow morning. So I'm going to buy it first thing tomorrow morning at 9:30. At 9:31, I will have sold the option for someone to buy it from me at a certain price, 23, by a certain date, this coming Friday. Okay, so for an option contract to work, you need 4 things. Beginning date, ending date, consideration, and an agreement. Meeting of the minds. That's the actual technical term. Meeting of the minds. The consideration could be anything. It could be money, it could be a handshake, it could be a piece of pie. It could be anything. Consideration, something of value. SB 1981 wants to take a look at Altria. Well, alrighty, we'll take a look at Altria in a bit. Holy cow, I missed all these questions. There's the first one right there, Gabriel. Okay, Gabriel, we're still on Dow. Okay, so the high, here's the bottom right there. Now she's going sideways. What's going on right there? Because that's the last couple of days. Now, I want to take a look at the 1-year chart, because the 1-year chart gives me an idea. The high of the year, right here. The low of the year, right here. Where are we right now? Right there. Look at all that space we have to go before she comes close to the high of the year. Johnny boy, what are your thoughts on BBWI? Hims? Dow, we're on Dow right now. Okay, sit tight. We're going to get there. All right, so let's take a look at the last 30 days. Because the last 30 days is going to give me a good idea of where do I think it's going to be by this Friday. Because if I do a stock option, a weekly stock option, first thing tomorrow morning, okay, I got 5 days. That's it. Okay, so the last 30 days, we are on the 16th, so the 16th is right there. Okay, so here's the last 30 days for Dow. And you tell me what you think. Remember the 5 things? High, low, where was it? Where is it? Look at this. Down, up, down, up. Well, that's it. Were you expecting more? That's it. Remember, this was created for a 9-year-old. I'm looking for 5 things. The high, the low, where was it? Where is it? What's the direction? Down, up, down. Now she's going up again. 22.93 is the current price. So the 23 looks good. So let's do the 23, and this could possibly be the very first stock of this week. All right, so we said 23. Come over to cover calls. There is 23 is right there. All right, now, anytime I do a trade, I always tell people to read it out loud to make sure what you want to do is what you're actually doing. Okay, so let's take a gander. Here we go. Dow by 1, covered call of Dow. 21 November 25. That means this option contract is going to expire at 3:59 p.m. this Friday. So whoever buys it from me, they have between tomorrow morning when I sell the option and Friday afternoon when it expires. It doesn't actually expire on Friday, it expires on Saturday, but at 3:59 p.m. is your last moment that you can do anything. Because at 4 o'clock on Friday, market closes. And guess what? You can't do anything. Unless, of course, you have approval for after-hours trading. I don't do after-hours trading. 40 hours a week is fine by me. Let's check it out. Okay. So, do you remember where I said simple, safe, predictable, consistent, and no way to lose? Do you remember that part? Well, if I'm buying it first thing tomorrow morning, I'm selling it for almost the exact same price I just paid for it. My profit, $58. Oh, do you remember I said simple? All right, here's the power I forgot. Okay, simple, safe, predictable, consistent, no way to lose. Okay, so simple. The covered call is the second simplest trading strategy. The easiest one is just to buy the stock. That's the easiest one. That's the simplest thing you can do. Just buy the stock. But there's a minor problem with that, especially trying to teach a 9-year-old. Okay? Once you buy it, you own it, great. Now, with that strategy, you got to wait for the stock to move before you realize a profit. There's a little bit of an issue there. Because if I bought it tomorrow morning, I got to sit and wait, and who knows how long it's going to take for it to move to have a satisfactory profit to jump out. Okay, well, I told you what I'm looking for. Simple, safe, predictable, consistent, 1% per week. Okay, fine. Let's go this a little bit easier. And when I say simple, the easiest is just buying the stock. Second easiest is doing a covered call. Covered call, you're basically buying it, and then you turn around and selling it almost instantaneously. That's it. I buy it and I'm selling it at the same time. The nice thing about a covered call, the way it's structured for my 9-year-old daughter was, I know exactly what the profit's going to be before I do it. Remember? Simple, safe. Oh my God, I forgot the safe part. Sorry. Covered call is so safe you're allowed to do it in your IRA. So the federal government recognizes that it's safe so that you can actually do it in your government-sponsored IRA. Let's go back a little bit. I missed some. Okay, right there. Hold up. All right. Predictable. Remember? Simple, safe, predict. Now we're on predictable. Predictable. Okay? I know what I'm going to make before I even do the trade. So if the numbers work for me, this is one of those set it, forget it type scenarios. You find a good stock. You buy it, you sell it, all at the exact same time. Buy it, sell it with a covered call, collect my profit, and then wait for it to fulfill, number 1, expire, number 2 or 3, make a decision to roll it into the next week. It's really not that difficult. It's kind of like, do you remember paint by numbers? 1 red, 2 blue, 3 green, 4 yellow, blah, 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 whatever. You know, this is whatever. Okay, so I'm doing it A, B, C, 1, 2, 3. Step 1 is to pick your stocks. Okay, pick your stocks. That's step 1. Wait a minute. That's step 2. Step 1 is the mental acuity, or the changing of your thinking process. That's it. Step 1 is the changing of your thinking process. Do you think you can do it? That's number 1. Do you think you can? It's not that difficult. The trading strategy I'm giving you for free tonight. Now, I promise you I'm not going to come at the end of the night. Have I got a deal for you? Buy 1 today, get 2. Yeah, no. I'm not going to sell you anything. Okay? I'm not going to ask for your email address. I'm not going to ask you to do anything. Nothing. Okay? I'm giving this stuff to you for free, so just buckle up, buttercup, and just pay attention. Right? Where was I? Okay, so simple, safe, predictable, consistent. Now, when I say consistent, this is a weekly optionable stock, like I showed you a little while ago. 1 week, 2 week, 3 week, 4 week. There's a difference between a weekly and a monthly. I don't do monthlies. The numbers just don't work. I can guarantee you someone's going to ask tonight about it because they always do. All right, so here's the trade. Buy one covered call of Dow. 21 November 25. That means this option expires this coming Friday. The $23 call option, that's the agreement. I'm going to sell to whoever buys this, the stock at 23. They're giving me the $58 for consideration. Okay? Beginning, ending, consideration, agreement. 4 things. All right. At the market, blah, blah, blah. Okay, so maximum profit, $58. All right. What is it costing me? The cost of the trade, including commissions and fees, is $2,200. So look at it this way. The way I look at it, I'm looking at it as if it was a weekly cash producing asset. What does that mean? Well, that means I got to come up with a big chunk of change up front. Okay, one contract, $2,200. Well, that one contract is giving me $58 this week. Now, I don't ever lose any money on this right here, what I paid. Now, the reason why I never lose that, because remember, oh, wait a second. I didn't go over the rules. I apologize. Remember 5 criteria, simple, safe, predictable, consistent, no way to lose. That's the 5 criteria for my 9-year-old. Because creating a trading strategy for a 9-year-old, this is what I had to do. All right, so the 5 rules are simple. And once you hear them, you're going to think to yourself, oh, man, that's so stupid. It is. They are so simple and straightforward that they actually sound stupid. Rule number 1, never buy something you don't want to hold on to or something you don't want to own long term. Well, what the hell are you buying it for if you don't want to own it? That's stupid. Well, yeah, rule 1, never buy something you don't want to own. Number 2, another stupid one. Don't sell for a loss. It defeats the purpose. Think about it. I'm buying something for $100. I'm going to sell for less? No, that's stupid. Why would you do that? Rule number 3. This one is just as bad. Okay, hold on a second. Because some of you are going to lose your shit on this one. Rule number 3. Make sure the company's profitable consistently. Why the hell are you putting money into companies that aren't profitable? This one boggles my mind over anything. Seriously, it does. Hey, let's put our money into this company, but it's not profitable. So what? Let's do it anyway. That's like the stupidest thing. Rule 4. Now, this one may not be stupid. It's what I'm looking for. Weekly options only. There's only 2 ways to get weekly cash flow. One, back up for a second. 1, I can go work for it, punch a time clock, 8 o'clock in the morning, yeah, no thank you. All right, for what we are doing here in this situation, okay? Weekly options only. The way to get weekly option, way to get weekly cash flow is by something that trades on a weekly basis, weekly options. Or do I really, think about it, hold on. I'm not there yet. Okay, what I was going to say is weekly options or sit in front of the computer staring at a chart all day long. I got no desire to do that whatsoever. Rule 5, make sure. Now this one's not stupid. This one is spot on. Rule 5, sure all the numbers work in your favor. 1, what am I buying it for? 2, what am I selling it for? 3, what am I collecting? 4, can't really show you number 4 because we need the chart for that. Basically, number 4 is which direction does the stock look like it's going? That's why we look at the chart first. We look at the chart first to give us an idea. Where's the high of the year? Where's the low of the year? What direction are all the other investors? That's us, me and you. We are the investors. We buy the stock. We are investors. Plain and simple. What are we thinking? What are the other investors thinking? Okay, is this thing going up? Is this thing going down? When are the earnings? When is the dividend? All these kind of questions all come, try to figure out what's going on. So, That being said, let's check the number on this one and see if this is going to be an opportunity for this week. So we need a calculator. Now, to find out your rate of return, you're going to take 58 bucks, okay? Max profit, 58 bucks. And we're going to take that and we're going to stick that into the calculator. Then we're going to divide that by the investment. Because to find your rate of return, it's the investment divide, profit. Okay, 22.42. Grand total of 2.5. Now, remember when I say I'm looking for 1% per week? 1% per week comes to over 50% per year. It's just math. There's 52 weeks in a year. And if my goal is to get 1% every single week, add it up. That's over 50% a year. That's my goal. Okay? Whatever I'm doing here is to show you how I get 1% every single week. You have other ideas? Fine. Share them. If I don't agree, I'm going to tell you. Okay? I'm what you call a Gen X. I don't really care about your feelings. And I know some of you are going to have a hard time with that. But guess what? Did you just hear what I said? I don't care about your feelings. Basically, it is what it is. Okay? You talk to any Gen Xer and they say it is what it is. Guess what? That's just the way it is. All right, so what do we have this week? Alrighty. What do we have? Uh-oh. What the hell just went on? Come on. There we go. This, we don't need that. All right, let's put this right there for now, because we got to get rid of all of this. Okay, so before I get rid of all of this, let me give you a brief rundown of what it was. This is everything from last week. So what we're going to do is we're going to look for 5 stocks every single night. Sunday, Monday, Tuesday, Wednesday, Thursday. I don't do Friday nights anymore, and I don't do Saturday nights anymore. So this is what we came up with last week. What do we have? We have 3M. Come on. UPS, 4. Starbucks, 1.5. Colgate Palmolive, 1.5. Apache, that was 2 something. What is this one? Harley Davidson, 3.2. All right, what is this one? VFC, 2.3. Come on. Oh. Uh-oh. What was that? What the hell? Trying to clear up everything. I probably should have cleared it up earlier. All right, let's forget about the old ones. All right, this is what we're looking at this week. Get that out of the way. All right, this is what we're looking at. Here it is. This is what we're looking at today. Dow. 21 November. That's this coming Friday. The $23 call option. Up $58 is the profit. $2,200 is the investment. And the profit is 2.5% for 1 week. Of course, that's if you like Dow. If. All right, so we'll save this one. 2.5%. Okay. 2.5%. All right, so we're going to take this one. We're going to put it over here for today. All right. I'll get rid of those ones later. All right, that's it. We got 4 more. Come on. All right, so that was Dow. Woohoo! Alrighty. Okay, Josh wants to take a look at General Electric. Okay, Life Wonders, J.P. Morgan. We'll take a look at that in a little bit. But I like Dow. It's on my list. Get back to her. Before we go on any further, okay, because we check this every single. What we want to do now, Invis, it's a website, tells me how many new stocks they've added throughout the week. Last week there was 10,616, I think.